Hello everyone, and you're watching Bitcoin Bubble news channel. The Fed and the Treasury don't want a deflationary event to happen because it would make the Treasury market less stable. When unemployment goes up, a lot of people lose their jobs, the stock market drops, businesses make less money, lay off workers, and their GDP goes down. This means that there is less money to buy us treasuries. That's not good. What's wrong with that? We're having a problem because we have huge debts. We have debts of more than $2 trillion every year, even though we're not even in a recession. That's a problem. These two groups work together to keep people's faith in the dollar. They also need to keep believing in the dollar so they can keep selling treasuries and having deficits. Prices have gone down from a high of 9% to a range of 2.5% to 3% over 3% over the last year and a half. There are still concerns, though, about the Fed's decision to think about lowering interest rates when inflation is still above its 2% goal. The SOM rule, which was created by former Fed economist Claudia SOM, is a key measure that the Fed uses to judge the health of the economy. According to this rule, the economy might be heading for a recession if the average jobless rate over the last 3 months is higher than its lowest point of the year by more than 0.5%. James Lavish makes some important points in an interview with Felix. For example, he talks about how the Federal Reserve's actions, especially its interest rate policy, are mostly about keeping people's faith in the US dollar and managing the country's huge debt, rather than strictly following its dual mandate of lowering inflation and increasing employment. Lavish thinks that it is both the Fed's and the Treasury's job to keep people's faith in the dollar. This is important so that people can keep selling treasuries and paying for these deficits. He says that low unemployment and stable prices will help keep that trust up. You can watch parts of the talk to learn more about what James Lavish said to Felix. If you like this video, please follow the channel and set up post alerts to get more information. Have fun with the movie. But the point is that inflation has been well above 2%, 2.5 to 3% for a number of months or since the beginning of the year. So you might be wondering why the Fed is suddenly ready to lower rates when inflation is still above their 2% goal. That's a good question. The second question is whether or not unemployment went up. It came up, it took. There is one sign that the Federal Reserve really likes to see. The SOM rule is the name for it. Claudia SOM came up with the SOM rule. She was a Fed, worked for the Fed, and was an economist. I think she made this rule after her time there or at the end of her time there. The rule says that we're in a recession if the average unemployment rate for the last 3 months is more than 50 basis points or more than 0.5% higher than the lowest rate in this cycle, which was in the previous year. To put it another way, if the lowest rate was 3.5% and the average for the last 3 months is over 4%, then we are in a recession. That means you're worried that the jobless rate is going to go up even more quickly. One way to look at the past is to compare jobless rates to recessions. In every single case, unemployment rates rise right before the recession. Thus, it takes place right after it reaches that 50% mark. Okay. Right now you're saying maybe, oh my God, this means we're going to go into recession, the SOM rule was broken. The last time we read this, it looked like we were going to go straight into recession. Rates should go down. Is it time to panic? The answer is no, there's a lot going on here. As usual, we heard what Powell had to say at the last meeting. So you need to think about 2 meetings ago to get ready for this one. He also said that the dual mission is now more balanced, which means that they are doing a good job of fighting inflation. The rate of inflation is now less than 3%. He said it was going toward 2%. It seems to have stopped moving at 2.5%. We'll talk about that later though. The second reason is that he saw unemployment going up and is worried about it. Now they're going to talk about unemployment. All of their attention was on inflation then. Now they're asking, what about unemployment? That's what we should do. So you knew that was kind of on their minds before this meeting. Trip to Summerall, and the second number on unemployment was ... It was a little noisy, but it didn't jump, which was good. You can read the lines of the news release before the meeting and then listen to what he said at the press conference afterward. When he spoke to the press afterward, Powell said, look, the unemployment rate is stable. The reason we think that the many millions of immigrants have changed that number is because they have come in. So when 5, 10, 15, or 20 million immigrants, who knows how many there really are, come to this country, unemployment will rise, but it won't be because fewer jobs are available. Instead, there will be more people looking for work. That's a big deal. James Lavish says that the Federal Reserve's two jobs are to keep prices fixed and make sure that everyone has a job. Maximum employment isn't set in stone, but keeping prices stable, which is what a 2% inflation aim means, is the main goal. Possibly because of how Australia or New Zealand dealt with inflation in the 1970s. He says that the real reason for this goal is the need to increase the money supply to deal with the rising national debt. This growth makes it possible to pay off future debt with dollars that are worth less. Lavish also talks about the recent rise in unemployment that the SAM rule caused, but he makes it clear that the Fed isn't too worried about it. He says Powell says the rise is due to a lot of new immigrants, which means there are more people looking for work instead of fewer jobs being available. Lavish talks about the huge $2 trillion debts every year. He thought that a deflationary event like a drop in the stock market or layoffs at businesses could make people less interested in buying US treasuries and hurt trust in the dollar. The Fed's main goal is to keep this trust up so that the economy stays stable and deficits can be handled. I mean, people are making sense of things. The Fed should be taking a bigger stand against inflation here if things were more reasonable. They would be afraid that we'll see that same spike we saw in the 1980s, right? There will be a rise in prices again. Also, why wouldn't the Fed just stop this and make sure there isn't asset inflation? The reason is that asset inflation is good for the government in the long run because it makes the market go up. As long as it doesn't turn into a boom and cause a deflationary crash, the market going up is good for them. This is because the US economy is very dependent on money. The problem is that we can see all of this and still have inflation. Why aren't they doing more to bring it down? Okay, let's talk about that now. What does the Fed do? Sincerely, rates can go up. Rates can keep going up. Rates could keep going up. Things haven't turned out the way we thought they would. They're saying that if the neutral rate is closer to around 3%, then lowering Fed funds to 3% would not be an expansionary move. And it doesn't make the world shorter. That means it doesn't make them. No matter how the economy grows or shrinks, it's pretty much the same. It doesn't move. In case that's where they want to go, how much did 5.5% really change the market when you look back? Why did you do that? If it's over 5.5% is really what you want, right? Not flexible. You know what word we're looking for here? If 5.5% is too high and they want to go back to 3.5%. So why does inflation keep staying at 3.5%? There are a few reasons for this. First, we have huge amounts of money coming from Congress and Washington, D.C. That spending makes prices go up. They're spending money and just making more of it. So the money supply is growing. You can see that M2 is growing, but they're also putting a lot of money into the market. And most of the jobs that have been made in the last 18 months have been government jobs. They're not secret. So that means that government spending is what keeps the economy going. Is it a fake? It's not fake because real money is going into the economy and being spent in the service areas, but it's not as useful. The government doesn't spend money on useful businesses.